Good evening, all. It's Sunday night. Hope you had a great weekend. This is our weekly newsletter. I want to talk a little bit about the market. Last week we talked about the head and shoulders, and everybody talks about the head and shoulders. Even CNBC now, all of a sudden, they believe in technical analysis, which really is funny to me. But here's a shoulder, here's a head, here's a shoulder, and there's the neckline. Whenever we break the neckline, we go down. Of course, it works the opposite way as well, an upside down head and shoulders. But what's interesting about this is that the market has absolutely refused the short side since we made the bottom of the 666 in beginning of March. I don't know why. I have my suspicions as to why the market is refusing the short side. There's lots of news, lots of new regulations coming out of the new administration, and the market is very nervous about going against it because all of a sudden they can come out with new news. All of a sudden they can say, you know what, we're going to go ahead and give you $5,000 tax credit if you hire someone. Every new hire gets $5,000. The business itself, the small business, gets $5,000 tax credit. Boom, the market will shoot back up. And we're going to scrap cap and trade. We're going to scrap the healthcare because we want the economy to recover first. Boom, the market will come back up. And when they take on large positions, they're very, very much afraid of those surprises that can, of course, make the market blow in their faces. So we have to be careful as well, and we have to look for the momentum in the market, and we have to wait for the market to actually decide on a trend and keep going. Now, this is a perfect setup. This is a beautiful setup on the short side. We have the head and shoulders. We have a break of support, but it stopped. On Friday, we lost our downward momentum, which is very, very strange. Now, here's a 60-minute chart of the S&P 500, just so you can see what I'm talking about. We took advantage of this downtrend. It was beautiful. It came back out for profit taking, which is completely normal, and then came back, and then on Friday it closed positive. If we break below these levels, watch out. This is when we're going to go into the market with a pretty heavy position on the short side. We are going to increase our position till we're actually pretty heavy on the short side, because I think that the market will actually go into a downtrend. Okay, so that's S&P 500. If you want to take advantage of the S&P 500, you have the spiders, SPYs, that you can go short, or SSO and SDS. SDS, as an example, is the ultra short S&P 500 per share. So if the market starts coming down, you buy right above this level right here, which will coincide with, of course, with the market itself. The S&P 500 break in support. This will break resistance because it's an ultra short. It's the opposite. It's double short. 62.18. If it goes up to 73, you're making quite a bit of money, quite a nice return. So that's the first one I want to talk about, is the S&P 500 and SDS. Now, I want to talk a little bit about different commodities. Gold looks like it's coming back down. Looks like silver is coming down pretty hard. And of course, oil, that we call the top on, is coming down pretty hard. Why are they coming down? They're coming down because the economy is slowing more than they expected, and people are not going to spend money, and therefore nobody needs commodities right now. That's the reason why. And that coincides with the dollar coming down at the same time, which is usually does not happen. There's other sectors that I want to show you. I'm talking really, really fast, and I'm sorry, but I'm trying to squeeze as much information as possible into a short period of time. So that's why my speech is a little bit faster. Okay, XLF. XLF is the Financial Spider Fund, and you can see that it's breaking support right now. It's breaking support because there's all kinds of shenanigans going on with the financial sector again. And a lot of the insurance companies are also going to suffer quite a bit, especially if all these plans come through. So we are shorting the insurance sector, the healthcare, the health insurance sector, because they're not going to be doing very well. Anyway, this is the XLF, and you can short the XLF, or you can go for the SKF. SKF is an ultra short financials fund, and you can see that 5006 is our entry, and the beautiful part behind it is if the XLF breaks, this one can fly. If it goes from 56 up to 100, you doubled your money, which is a beautiful thing. So that's the beauty behind playing ETFs and playing the sectors, is that you can do all this. There are other sectors that I want to show you, and that's XLP is one of them. That's consumer staples, and you can see the very, very clear lower top on it. One top, lower top, support. If it breaks this, consumer staples are going to go down. The other one that I want to show you is XRT. XRT is the S&P retail, and is basically doing the same thing. In other words, the consumer himself is pretty weak at this point. Okay, that's the consumers. So we have this combination of gold, oil, silver, all the commodities coming down, and we have consumer coming down, we have financials coming down, everything looking pretty grim. Now, the dollar, this is the dollar index, and you can see that it's holding pretty well. Of course, it's holding, and I don't know how long it's going to keep holding, because this definitely looks pretty weak. It's hesitating right now, but it's still in a very strong downtrend. The currency that's doing extremely well right now is the one that I gave you last week, and that's the Japanese yen. We talked about the 105.80 went up to 108.36, which is quite significant in terms of currencies. I think the Japanese yen is gonna keep going up, while the rest of the I don't want to call it the Western world, but basically the America and Europe are gonna come down because of this economic recovery that so far is not happening. It's looking pretty weak right now. Our saving grace right now are the bonds. This is the 1 to 3 treasuries. And here's the 7 to 10, and here's the 20 plus, and you can see how they made a V bottom, and they're coming back up. Why are they coming back up right now? Why are bonds coming up right now? Because a lot of people are escaping hard assets, stocks, commodities, and so on, and they're going into safety, and government bonds right now are safe, comparatively speaking. So that's why we're seeing a spike in bonds, because people are going for that. They're going for the safety. This is good news in a way, because it's going to lower mortgage rates, which of course is going to help out our real estate market if that gets out of its own way. Here's home builders, S&P home builders, which is a nice ETF. You can see how it's in a very much of a downtrend, and it just broke support, and it's looking pretty sad. The lows were made over here. We're not that far away from the lows, and if you look at it on a very long-term basis, let me see if I can get you a weekly chart. You can see this index used to be at 45, and it said he's sitting down pretty low. Okay, so if you look at the cheat sheet that you have under this newsletter, if you look at this newsletter, scroll down a little bit, you'll see a whole cheat sheet. I made a couple changes to the way we express ourselves, the way we talk about the trend strength from -10 up to +10. That should help you out. 0, of course, is a neutral trend. -10 is a very strong downtrend. +10 is a very strong uptrend. So anything that you're seeing with a negative, of course, is a downtrend. -1, of course, is a slight downtrend, and so on. You will see possible breakpoints on the right side of the sheet, and that's basically the entry points that I talked about. Some of the entry points was on XHB, for example, the 1103. It was on XLF. It was 1126. On XOP, oil and gas, we called it a 3010. Let me give you some more. We talked about the dollar. Dollar hasn't moved yet, but we talked about the Japanese yen. The fact that if it breaks 105.80, it's a buy. That worked out pretty well. Oh yeah, and there's one more that I want to show you. This is very important, and that's the emerging markets. Emerging markets is sitting right on top of support as well. So it's going to be global. It's a global economy, and it's a global pain right now. So what we have to watch for really is a break. If you see a break, don't second guess it. Don't think about politics. Don't think about the economy. Think about the fact that the market is breaking. If the market is breaking, you go short. If the market is breaking, you have two of them. You have the SDS, which works on the S&P 500, and you have the SKF, which works on the financials. Remember, your job is to take advantage of whatever happens. Whatever happens, happens. It's out of your control. You want to be a victim, or you want to take charge. If you want to take charge, you are going to go short on the market and enjoy it. Again, wait for the actual break. Have a great week.